All right, so I got a ton of people asking me questions in the DM, so I'm gonna answer some of those questions. The first question is, I only have $50 to $100 to invest. Where should I start and what should I put it in? Now, it depends on how old this person is. If it's a young person, I would say you could be a little more riskier. So maybe you look at cryptocurrency, maybe you look at some of the Mag 7 stocks. But if someone is a little bit older, I would say, first of all, why you only got $50 to $100? You need to budget better. But the investment would be different because I would say you probably need to build up your dividend paying portfolio. And so we would take them down the line of figuring out what stocks make the most sense. I would also want to know if that $50 to $100 is a one-time deal or if every month they have $50 to $100, because that's going to change the investment risk profile 100%. The second question I got: what's the difference between investing in individual stocks versus ETFs or mutual funds? By the way, mutual funds are kind of dead. I wouldn't necessarily want to invest in mutual funds now. ETFs are a better investment. Let me describe it first of all. Exchange traded fund is what an ETF is, all right? An individual stock is just an individual stock. So let's say, for instance, you have Nike, you have Starbucks, you got Dutch Brothers, you got all these individual stocks. And let's say the CEO of Dutch Brothers comes out and says something really stupid. What's going to happen to that individual stock? It's going to go down, right? But if I have an ETF, I have Starbucks, Nike, Apple, all those same stocks, but they're in a ETF. That means I don't have individual shares of them. I have a little sliver of Nike, a little sliver of all the other ones, right? So what happens is if the Dutch Brothers CEO says something really stupid and I have an ETF, it's not going to go all the way down because those other stocks, their CEOs didn't say anything stupid. So it's going to hold the price of the ETF up. So individual stocks, a little more riskier, where ETFs, you have a little bit more flexibility with it. Is it too late to start investing if I'm in my 50s? Well, I'm not in my 50s, so I can't give someone older than me advice, except to say I don't think so. All right? So it doesn't matter how old you are. You should be investing. I don't care if you're 5 years old or 105. You should be investing. I was just looking at a video and it said that most people are outliving their parents. That means that we're going to be living in our 80s, 90s, 100s. So you don't want to be the guy that didn't invest in your 50s and you have another 40 or 50 years to live, right? You're going to be broke. So yes, I would strongly suggest if you're in your 20s, 30s, 40s, 50s, 60s, 70s, and you still got some money in your 80s, you should be investing. I'm scared of losing my money in the stock market. How risky is investing really? It's like anything else, right? We all have risk in our life. You could literally walk outside and get hit by a car. Now, I'm hoping that doesn't happen, but it's a possibility. Just like when you invest in a stock, it's possible that that stock could go down. It's possible that the company can file bankruptcy and no longer exists. So there's risk inherently in investing. However, if you look over the last 60 to 70 years in our country, there's a few things that have always outlasted other things, right? You got real estate, you got life insurance, and you got investing in the stock market. So those three things have held true for the last, 7, 8, 9 decades. So I would tend to say, yes, it is risky. However, it's more risky not to invest, especially in the time frame that we're in right now. The market keeps going up and down. When is the best time to actually invest my money? Well, rule number one when it comes to investing is what? Buy low, sell high. Buy low, sell high. So the market is actually, as of today, hit all-time highs 4 days in a row. So this isn't necessarily the best time to be going out and buying your favorite stock. However, if you do what we call dollar cost averaging, that's when you take whatever your budget amount is for investing and you actually put that into the 5 or 6 or maybe 10 stocks that you're looking at in your portfolio. It really doesn't matter what the price is. Let me give you an example. Let's say you have $100 that you're going to invest every month, okay? You have a portfolio of 10 stocks. Do the math. What's that? 100 divided by 10. It's 10, right? So that means you're putting $10 into each one of those stocks. It doesn't matter if the price of the stock is at $600 a share or if it's at $10 a share. Now, if you're buying it at 10, you're buying a whole share. So I guess it would make a little bit of a difference. But if I'm buying that stock at $122, but I'm only putting $10 into it, doesn't really matter. That's my budget. That's what I can afford to buy. So I'm buying fractional shares of my favorite stock monthly by doing dollar cost averaging. I want to invest in real estate, but don't have money for a house. Are there other ways to invest in real estate? There are. They're called REITs, R-E-I-T-S. It stands for Real Estate Investment Trusts. These are where you can buy a REIT. For example, O is a ticker that we like. You can buy into the ticker, and they invest the money for you. So they kick you out a dividend every month. And of course, if the price of the commodity goes up, you can sell it at a higher price. But those are ways that you can invest in real estate without actually having to buy a house or taking out a loan or anything like that. So comment your questions below. Think and Grow Rich. We'll see you on the next one.